In the previous session, I taught you how to predict the next candle using continuation candles and reversal candles. In today's session, I'm going to teach you the common mistake traders make when using these candles. I'm going to help sharpen your skills, teach you more about the seller zone, teach you more about strong zone, and how to accurately take positions in binary options. Okay, so in the previous sessions, I taught you about the doji candle, the hammer candle, the hanging man candle, and the spinning top candle. If you haven't watched that video, I'd advise you watch that video first before you continue watching this video. Okay, so let's get on with the session. So we've been moving bearish over here, which is the same downtrend is the same word for bearish. Downtrend basically means bearish, right? So we've been moving down, we've been moving bearish, and we've reached a point where the buyers took over and moved the market up. We call this a support zone, as we all know that, right? So when a support zone has an engulfing, if an engulfing creates our support zone, we also call it a supply zone, right? It's also now a supply. And when we have a supply, we can trust it. We can also put a level, we can also put a level over here. We can also put a level here, but that will be in Forex. But we do binary, so we won't do that, okay? So I want to show you the common mistakes most traders make when using continuation and reversal candlesticks. As you know, I don't trade with indicators. I only trade with one indicator called a moving average, which helps indicate the market direction. And that's the indicators we're going to be using for our whole entire lab. I only use price action, technical analysis, and candlestick physiology and trading physiology. So let's get on with the session, guys. Okay, so the market has been moving down. Buyers took over and took the market up. The sellers came in, creating this resistance level, right? Creating this resistance level. They created this resistance level over here, right? They came all the way down. Let's say we had an inverted hammer that did not close on the level, right? So we had an inverted hammer that did not close on the level. What do we do? Do we go for a buy? Do we go for a sell? What do we do? So guys, in this case, as I showed you, in this case, we have space, we have a gap over here. As you can see, the candlestick did not touch the level. We still have a gap over here. And as you know that the market will do almost anything to fulfill its level. The market will do absolutely anything to fulfill its level. So remember, if you have a gap in between over here, you cannot take a trade because the market is going to try its best to fill in that gap. The market is going to do everything in its power to fill in this gap. Right. Okay. Let's have another example. So let's say we have an overlap. What do we do? Do we buy? Do we sell? We don't do anything in a situation like this. This is the common mistakes traders make. When there is a gap, they think that it's close to the level, so they buy. But when there is an overlap, they think that it's close to the level, so they buy. Guys, if you ever see a level and there is a gap to the level, do not go against the level. It's better not to even trade and wait for a nice opportunity. Okay, so that's the common mistakes I've seen new traders make. Trading when there is a gap between the level or when there's an overlap. Sorry guys, I had the candle color set to green, but it doesn't really matter because we all know that it's going bearish. Okay, so this is a perfect example of the right way, of the right setup, right? So this candle closed exactly on the level. This is completely different from this. Okay, so here we close on the level, and here we close almost on the level, but we have this gap over here in between. So the market will do everything in its power to fill in this gap and then go up, right? So the one mistake I want you not to make is to trade when you have gap or when you have an overlap. When you have an open overlap. When you have an overlap, what can happen? Two things can happen when you have an overlap. It's either the market can break this level or it can bounce back up. So it's a 50% chance. And we don't take 50% chance as traders because we're not gamblers. So what you want to do is we want to set up that accurately 80 to 95%. Okay. So this works exactly the same for the other patterns. Let's say we had a doji. What do we do? Do we take an up trade or do we not? We do not take a trade, guys, because of this gap. We won't take a trade because of this gap that we have over here. We cannot trade because of this gap. If we have a gap, we do not trade. So if the situation was something like this, we would have been able to take the trade. There is a huge difference between this and this. On this scenario, the doji closes exactly on the level, indicated that buyers are now going to take control. But when there is a gap, sellers might still be in control, so we do not take the next trade, right? So once we see that the doji closed on the next level, we can go for a buy trade. We can go for a buy trade over here. And we will win the trade 95% of the time. Remember, there's no strategy that's 100% in trading, no matter how good you are. Every trading strategy has to be around 0% to 95%. And I'm showing you strategies that are above 85%. So this also applies to the hammer or the hanging man. So let's say we have a hammer over here, right? Okay. What do we do? Do we buy? Do we sell? We don't do anything, guys. That's what we do. We do not do anything. We don't take a trade unless if we get another hammer. And most likely this is going to act as a continuation. But then you also need to notice where the week closes. I'm going to make another video on the weeks. Okay, so let's say we had it closing exactly over here. For sure, we know that the next candle is going to be a buy candle, guys. For sure, it's 100% sure the next candle is going to be a buy candle. You should avoid the mistakes of gaps and overlaps. Okay, let me show you an example of an overlap. Okay, so let's say we had a hammer over here, right? It looks so perfect. Everything looks so perfect. But then we have an overlap over here. We have this overlap. The market can continue going down. Don't mind the color of the candle, guys. Don't mind the color of the candle. The market can continue going down, right? So what we want to do is we want to wait. We want to wait and we want to look for another. We want to look for another setup, another opportunity where the candle actually closes on the support level, right? Okay, so now that we got that out of the way, now that you know the common mistakes you guys make and you know what not to do and what to do, I want to just teach you a bit about this seller zone and buyer zone that I've heard here. Okay, so there's weak seller zone and strong seller zone, right? So if if you have an uptrend, a bullish momentum, right? And then it creates us a zone, right? So this is where the sellers came in and took over. So the buyers were in control over here. The sellers came in and took over and led the market all the way down here to this new support, right? And the buyers took the market all the way up here to this level over here. So why is this a very strong level? This is one of the strongest level you can find in the market. It's because the wick of this red candle is longer than the wick of this green candle. So let me teach you the psychology behind this. So the market opened over here, right? Buyers were in control. Buyers came in all the way up here, all the way up here, and stopped over here. Then sellers came in and were like, nah, we're dominating this. The sellers push the market down, push the market down, push the market down, dominating, showing very, very strong power, very, very strong power. And closed it over here. Buyers just buy a little bit of buyers tried coming in, but sellers were still in control. So the next time the market comes to this zone here, there is very, very, very strong sellers. Because as you can see, the buyers also came in on this candle. The sellers pushed them down and closed them on the level. They tried coming back up again here. The sellers pushed them down all the way down, right? So the next time the market's gonna come into this zone, the sellers are gonna still be aggressive and still be strong, right? So we do not buy in the seller zone, no matter what you see inside the zone, no matter how perfect the setup looks inside the zone. We do not buy. This is a danger zone for buying. If you find a selling setup here, you can take it. With confirmation, this is all the confirmation you need for a selling setup, right? But you do not buy in this zone. The same